Welcome back. Economic empowerment for women is a crucial driver of social and economic progress. Yet millions of women across Nigeria and Kenya face significant barriers to achieving financial independence. A recent study conducted by the Bill and Melinda Gates Foundation in collaboration with White Ribbon Alliance, Nigeria Health Watch and Rural Women Peace Link in Kenya. Peace Link also surveyed over 200,000 women to understand their ambitions, challenges and support needs. The findings highlight the present need for financial inclusion, access to capital, education and policies to support women's economic aspirations. Joining us today on Newsday from our Abuja studios is Joy Una, lead gender equality at Gatefield, to delve deeper into these insights and discuss actionable solutions for empowering women economically. It's good to have you with us, Joy.
Thank you so much.
All right, so let's start off with the issue of financial inclusion. How would you assess the trend in Nigeria and, of course, elsewhere in Africa currently, and who should be the driver of engaging inclusion for women?
All right. Thank you so much for having me here for this very important conversation. I would start by saying that small businesses drive Nigeria's economy, and women own over 40% of small businesses in Nigeria, and it contributes to over half of our GDP. And so essentially what we're saying is that Nigerian women drive half of our economy. And yet, despite this, in the recent survey by the Gates Foundation, we see that up to 62% of women state that the lack of access to capital is the primary barrier for them to grow and expand their businesses. We also know that Nigerian women have shown to be credit worthy, and so they repay up to 95% of the loans that they take. And according to Moneypoint's credit data, we have seen that Nigerian women also are more likely to pay their loans 2 times more than men. And yet, despite this, they still lack the access, the opportunities to contribute to the economy, contribute to society in ways that are meaningful. And so to directly respond to what you asked, it is the responsibility of policymakers, decision makers, to create policies that truly support women, that truly support their ambitions, that truly support Nigeria as a whole, because we know that when women have access to funding, it has multiplier effects, not just for them, but for their immediate families, for the society, and for the nation at large. So it is just as much as it is my responsibility, it is yours as well. But the power lies in the hands of development decision makers, policy makers, the CBN, commercial banks, development financial institutions like the Bank of Industry and SMEDAN.
So what role would you say cultural and societal norms play in preventing or inhibiting these women from accessing financial literacy and also being financially included?
Yes, so that's important because beyond financial requirements, the financial needs for women-owned businesses, they also need other kinds of technical support. So in the sense that when these loans are available, do women know how to access it? Do they have the requirements? And so what we've seen is that the requirements for accessing loans is old. It is the approaches that we use, it is biased against women. So for instance, we see banks with stringent collateral or stringent requirements for accessing loans. And we see that for some, they ask for land collateral, when we know that in some cultures in Nigeria, women are not even allowed to own lands. And so what we need is for these decision makers, financial institutions, to step up, and also to first step up and create dedicated funding for women-owned businesses. But beyond that, make it accessible to the people who truly need it. And what does accessibility look like? It looks like lower interest rates. It looks like simplified collateral requirements. We've seen these things work in pilots. For instance, the World Bank pilot with Access Bank, where they moved from collateral requirements, stringent collateral requirements, to a more cash flow approach, where women are able to request for loans because they are able to show their records, they are able to show that they're serious about their businesses. We've seen they can show the numbers on repayment and are actually able to access the funding that they need to grow and expand their businesses. We also know that our economy as a whole will be better if Nigerian women have this opportunity. There's a potential for our GDP to be increased by over 229 billion if women have the access, the opportunities to the things that they truly need to contribute to society.
Very good, Joy. Interesting you should mention the word bias here regarding the financial inclusion for women regarding this issue. Now, let's talk about rights for women themselves on this topic. How enlightened are they? You know, despite the challenges of, not making headway due to their gender, do they actually have that, are they educated enough to make headway in that regard?
I would respond to that question and say, why not? So right now, the data shows us that despite this access to funding or limited access to funding, women are still leading in industries across different sectors. Women are building businesses, they are creating jobs, they are leading the agricultural sector, the agricultural sector, the food industry, and fashion. And so the question is not, are they educated enough? It's that women have shown their capacity. And despite all of this, there's still all of these systemic barriers that prevent them from accessing these loans. So no, it is not a question of, education and all of that. Make these loans, make these finances accessible, available to the women. And also, while those dedicated funds are being created, that you can also provide beyond financial support, technical support as well. We see examples like the Tony Elumelu model, where billionaires have provided, methods to de-risk credits, but also provide financial and technical support to women-owned businesses. And so we can have those kinds of interventions available for women-owned businesses. And also as a government has the moral and economic imperative to make sure that resources available for small businesses are equally allocated to both men and women. So it should not be a statement of women at disadvantage just because they are women. We have the government, like I mentioned, has that imperative, and this is where government agencies like the Bank of Industry and Sweden can provide, that leadership where, and I know that the BOI has its fashion fund, the 1 billion fashion fund, which is less than $1 million right now.
All right.
And while that is recommended for women to apply for, it is important to say that more people need to step up because it simply does not close the $42 billion credit gap.
Well, we have to let you go now. I would have loved us to look at it on a wider scale, especially looking at it from the perspective of the African continent, seeing countries like Rwanda and Mauritius having a lower or closer gender gap when it comes to financial inclusion. But we're really pressed for time and we have to let you go. Thank you so much for your time on Newsday, Joy, for talking to us about the issue of financial inclusion for women in Africa.